and another correction. But wait, hold on. A very strong signal has just lit up on the Bitcoin chart, one that has always heralded increases in the past. Curious what it is and what to expect from it. Let's get started. Hey there. Welcome to another episode of Crypto Market Analysis, where we meet every week to analyze Bitcoin, Ethereum, and an altcoin chosen by you. We meet up, and as you already know, we take a look at the charts from 3 different perspectives this time: technical, on-chain, and fire charts. And as a result, you won't find such condensed analytical knowledge as we serve here anywhere else on the internet. We know you appreciate it. We see the subs. Thank you for that, but I also know that many people who watch these videos aren't actually subscribed to the channel, so now is the perfect time to hit that subscribe button, leave a like, ring the bell, drop a comment, whatever you feel like. And remember, the content of this video does not constitute investment advice. What you see here is solely my personal opinion about what I observe on cryptocurrency charts. If you want advice, consult a licensed advisor or simply do what I do, conduct your own research. So if you acknowledge this, you're ready for the analysis. Let's get started. Bitcoin reaches the level of $112,000 and finds support here. If you watched yesterday's quarter hour with Kanga, my analysis was mentioned there, where I specifically talked about this being the key rebound point. And of course, I also talked about it on my Twitter, so if you follow me, you were definitely up to date with this. In any case, we talked about this in previous videos, that from this gray box, which I'm highlighting here right now, a correction could indeed occur, and that correction would result in a drop to this level. Is this the end of the correction? Well, we don't know. There are some indications suggesting that it might not be. Anyway, Bitcoin bounced off 112,000, shot up a bit higher, and in my opinion, it should reach values between 116 and 117 here, where it should encounter the next resistance. Why specifically that level? Because here we have the wicks of the candles drawn from this consolidation that took place a bit higher. So here we can see that there was some demand, and at this point, supply may appear. Currently, we can see that the Monday candle reached a value of $115,732, at least on the exchange we have in front of us at the moment. And here we saw a rebound and then another drop to around 112. 112,870, we can see that this was the wick of Tuesday's candle, where this level was tested once again. So this is practically the third time Bitcoin has touched the 112 level from above, and that raises some concerns about whether Bitcoin could fall lower. And attention, it can drop, in my opinion, to $110,000. And that's indicated, among other things, by the RSI. The RSI, which we are now overlaying on our chart, we have it here at the bottom of the screen, and we can see something very concerning, something I've also been talking about for quite some time, that Bitcoin has dropped below 50 on the RSI. Let me remind you, the 50 mark is this gray horizontal line here, which serves as the boundary between the bull zone, those playing on the upside, and the bear zone, those on the downside. Why is that? Because the 50 mark is an intermediate level where a certain rebound occurs, either upwards or downwards. If the RSI is falling from above and tests the 50 mark and then bounces off the 50, and this may indicate that the bulls are simply taking control of the market, they are stronger than the bears, and at this point they find a fundamental support level, which is precisely the 50 mark. However, the 50 mark was broken, which shows us that the bears have taken control of the market and are now testing resistance at the 50 from below, and as we can see, this results in a slight decline in the RSI and the possibility that the RSI may drop a bit further. So why $110,000? Well, because if we had a support level here at $112,000, which is this peak, and we can see that this level has been breached multiple times, then the next fundamental support level should be the next peak, which is marked here by these two tops. Now here we have a value that was established back in June of this year. Later, after a few weeks, we had another identical peak, which was set at the same level, and naturally this is of course $110,000. So here below this support, Bitcoin can indeed draw in liquidity and attempt a breakout to the upside that is very much justified by factors from a broader perspective, which we will discuss in a moment. But it's worth emphasizing this broader perspective, namely that Bitcoin in the current bull market is simply consolidating a lot. These are not typical corrections that would lead us to expect drops of 30 or 40%. These are prolonged consolidations that bore the market, that cause both longs and shorts to be closed, and that result in Bitcoin changing hands over a longer period at specific price levels. We saw this kind of pattern here. We saw a similar pattern here. Here, however, a deeper correction appeared. Here we have a similar consolidation pattern, which was also boring. We remember it perfectly well. And now we have a similar pattern, and each time this consolidation ended with a deeper drop, just as we can see here. We had a deeper drop and a breakout. Here at the very end of this consolidation, we had a deeper drop, a liquidity grab, and a breakout. Now we are observing a very similar pattern. We haven't seen that deeper drop yet. we have a drop to $112,000, but a liquidity grab below and another breakout is entirely justified. And this could be another attempt to attack from this level towards the $120,000, $123,000 levels. So from this perspective, in my opinion, this looks like the most realistic scenario. Nevertheless, let's remember that Bitcoin likes to surprise, and if rebounds occur from this level, I won't be particularly surprised either. Still, I continue to place my buy orders below 112 all the same. And what does the weekly close on the Bitcoin chart tell us? Well, we have declines of about 4.4%. The MACD histogram is shifting its momentum to negative, as we can see right here. And apart from that, there are a few positive factors, but the most important and significant one from my perspective is the hash ribbons buy signal, which has been confirmed on the weekly time frame. Why am I mentioning it? Because it's an extremely strong buy signal, which on the weekly time frame for Bitcoin is appearing for the 19th time in history, and in each of the previous 18 instances, it has always heralded an increase. I also reported about these increases on my Twitter and shared a full chart that detailed exactly how much and when they occurred. And we have the first such buy indicator, which appeared in December 2011, signaling an increase of 76% in 15 days. The next one, in May of the following year, was already a bit lower, as it signaled an increase of only 11% in 27 days. But still, it's worth noting that as time went on, we can see that these increases started to grow, and at a certain point even began to level out. We can see that the following year it was already 156%, then the next year 1200%, and here we have values often exceeding 100, sometimes even 250%. And now they're leveling out at several dozen percent. Two such buy signals also appeared this year, and they occurred in March. And here they resulted in increases of about 34% within 30 days. And we also had such a signal in May 2025 this year, which resulted in increases of about 15% over 52 days. So the indicator, whatever you may say, is still infallible. However, it's worth noting that this doesn't mean Bitcoin can't correct further. It's worth, at this point, taking a look at the Bitcoin chart and basically turning on the hash ribbons indicator and noticing at what moment it lit up. We can see that the center of this indicator, the center of this buy signal, falls exactly on July 23rd, and since then, Bitcoin has dropped. And that means that if, over the longer term, Bitcoin rises by a dozen or even several dozen percent after this indicator appears, then when a correction occurs, these are simply buying opportunities that can just increase our profits, increase them after the buy signal appears. So for me, what is currently happening on the chart is nothing but a buying opportunity. I'm taking advantage of it. This indicator has absolutely never let me down so far. I hope that this time will be no different. And now Bitcoin on Fire charts, which is an overview of what's happening right now in the order books of the world's largest cryptocurrency exchanges. Let me remind you once again that the blue line represents the price of Bitcoin. Meanwhile, these horizontal lines that we see here, if they are above the current price, are sell volume lines. If they are below, then those are buy volume lines. The brighter they are, the larger those volumes are. And we can see that currently Bitcoin is moving in a dark area where there isn't much volume at all. Let's first look from the top, where we might expect larger sell-offs if they were to occur. And here we can see these major resistances appearing around the 117,000 mark. A bit higher than $117,000, reaching up to around $120,000. And this could indicate that there might indeed be resistance here, which could lead to another period of consolidation. Why consolidation? Well, because just below the current price, we can see that from around 112,000 once again, down to 110,000. And look, we just mentioned this value a moment ago. There are very clear buying clusters appearing. So we can see that those trading Bitcoin are paying attention to technical analysis and are placing their buy and sell orders accordingly based on what is shown on the technical chart. So in my opinion, a correction down to 110,000 is fully justified and entirely possible. I wouldn't be surprised if liquidity is drawn in here and Bitcoin is then pushed higher. And who is currently buying? Well, we can see that on the CVD, there really aren't that many buying orders. We can see that basically only the whales are making moves. That's our brown line here, but it's not breaking out particularly high. Nevertheless, at the current Bitcoin price, whales are accumulating. Ethereum compared to Bitcoin is showing much more strength, as evidenced, for example, by the RSI, which is bouncing off the 50 level. But let's start with what's happening on the price chart. In the last video, we said that 4,000 is a reachable level if 3.5 gets broken. However, 3.5 should have acted as support, but that didn't happen here. Ethereum dropped lower, although only for one day. The next day, that value was recovered, but 3.5 was broken. We had a false breakout here. It was almost 3%, 2.7. Let's remember that if the drop is less than 3%, then it really could be a false breakout, and that's what happened here. Nevertheless, I mentioned that I was hoping Ethereum would bounce off 3,500. It didn't bounce there perfectly. In any case, we can see that there is some justification for this at certain peaks that were also present here, although these weren't exactly obvious levels from which Ethereum should naturally bounce. A much more likely scenario would be a deeper correction, reaching even down to this gray box. And honestly, from these lows that we're currently seeing on Ethereum, which is somewhere around $3,400 or even a bit below, down to this gray box, I'll be happy to place my buy orders. Why? Because I see the potential for Ethereum to consolidate here and form a bullish continuation pattern, continuing the current trend. We have an upward trend here, which is very clear, as you can see. Ethereum is rising in this trend, and it could form, for example, a symmetrical triangle here. If a symmetrical triangle is formed here, then my orders probably won't be filled. But if it's a descending channel, for example, which is also considered a bullish pattern, then my orders will most certainly be picked up. It's also worth noting that, in addition to that, on the MACD, we also have a histogram that is gradually turning bullish. However, it's not very pronounced at this moment because the bars on the histogram are pretty much even, which could potentially mean that the bearish action here might still continue for a little while longer. Besides that, looking at Ethereum from a broader perspective and setting indicators aside, it's worth noticing how it behaves in relation to the $4,000 level, which we can see here on this line on the chart. Very consistent bounces. I have to admit, this technical pattern really reminds me of what happened not so long ago with gold at the $2,000 resistance level. So Ethereum is treating the $4,000 mark in a very similar way. It's definitely a tough resistance to break, and consolidating below it is justified and even necessary for a breakout to happen smoothly. And now some fireworks on Ethereum. Here we can see that Ethereum has a certain resistance level, which reaches up to $3,700. But it's also worth noting that, in fact, the fire charts themselves don't really suggest much more. But the CVD tells us a lot, indicating that Ethereum is in an accumulation phase, and this accumulation is being driven by whales who are buying up Ethereum, at least when comparing the charts to Bitcoin, with greater enthusiasm. Other market participants, as we can see here, are currently not interested in Ethereum. These lines have dropped very low. However, as we can see, the whales, the brown line, are really charging ahead. The altcoin chosen for today is Chainlink. Chainlink has done exactly what we expected from it, meaning that for a long time we've seen this gray box here, which serves as support for Chainlink. And we also saw here a downward trend line, which was another line to break through. It seems that the last video about Chainlink was actually at the moment when Chainlink was breaking through this line, although I'm not sure. In any case, we talked about the fact that Chainlink might pull liquidity from lower price levels, and that's exactly what happened. It dropped below our gray box, then hovered just above it, and basically broke out from that gray box all the way to the price peak. As we can see, Chainlink has risen by 56%, which is really a lot in a relatively short period of time, because here we see just 15 days and 15 price bars. Currently, Chainlink is in a correction. This correction is causing it to drop basically below this peak that should actually serve as resistance, which may indicate that the demand for Chainlink is very strong, and what we are currently seeing is simply the realization of quick, rapidly gained profits. 55% in 2 weeks, anyone would want to make that much. And we can see that Chainlink is making a very nice effort to hold at the level of these peaks, at the level of this zone, which is basically a small consolidation here. But unfortunately, on the RSI, we can see very clearly that Chainlink has dropped below the 50 level, which means that the bears might try to take control again. Let's also take a look at what happened on the MACD. And on the MACD, it's very similar to Ethereum, meaning we have very even bars on the histogram. They are decreasing, which is why they are getting lighter, but still, they remain relatively even. And here, there is a fierce battle going on between the bulls and the bears. In any case, where should we look for support? Where should we look for resistance? I'll start with resistance because in the situation where Chainlink breaks out, it's very clear to me that these peaks around $20, maybe the range from 19.5 to 20, are key. So these are the areas where I would absolutely be willing to sell Chainlink, at least partially. The next peaks, if another breakout were to occur, and we know that the momentum of the first breakout was strong, could take Chainlink to values around 27 or maybe a bit lower, say 25 to 27 in that range. This would coincide with those previous tops, the closing of those candles that we can observe here. I'm marking it at this point, $25, and those peaks at $27. Well, for Chainlink to reach such values, it would need to gain strong momentum. When does Chainlink gain strong momentum? There is a formula for that. And there's a certain point that makes me eager to go long on Chainlink, but it's not a point we can determine by price. It's something we can identify with indicators. And I'm talking here about the RSI, which every time Chainlink reaches levels around 30 on this indicator, as we can see on the chart at the bottom here, a very strong rebound occurs. And each time Chainlink starts a short term, even if only a few days or a dozen days long upward trend. So I expect that if Chainlink, once again during this consolidation, assuming it continues, drops down to the 30 level, that will be the moment when I open a long position on Chainlink. And I'll probably let you know about it as well. And now Chainlink on fire charts, and at the start we can see the resistances. The first resistance is at the $20 level, $20. And let's take another look at the technical chart. $20 is exactly the area where the previous peaks are marked, which is precisely my first selling point. Besides that, it's worth noting that we have some support levels stretching from $15 to, well, basically $15.2 and a bit lower down to 15. But there are also some support levels that have been withdrawn, and those are located just below 15, where we can see a clear buying cluster that was basically withdrawn in the last few hours of the last day, precisely today. So there is a risk that Chainlink will drop, and at this point, it could fall below the values that are the local lows reached right here at this moment. This in turn could cause Chainlink's RSI to dive down to 30, which is exactly the level where I would be happy to open a long position on Chainlink. It's also worth taking a look at the CVD and seeing who is currently buying Chainlink, and we can see two lines, the purple and the orange one. The purple line represents the second largest wallets on the market. These are the ones holding between $100,000 and $1 million, and they are currently buying Chainlink. And the orange line represents the retail investors. They are also currently interested in Chainlink. And if you'd like me to analyze your altcoin, remember, it's a very simple thing to do. All you need to do is register on Kanga, and you'll find the registration link in the description of this video. Take a look at the cryptocurrencies we have and choose the one that interests you the most. Let me know in the comments which crypto you'd like to see in the next video. But remember the three basic rules. First, it has to be a crypto from Kanga. Second, it can't be KNG. And third, it can't be any meme coin. So you know what to do. The comments are open. So what's going on with the Bitcoin spot ETF in the United States? Well, here we can see that on August 1st, we basically had the second largest volume bar, which was a sell-off bar that we've seen on Bitcoin ETFs so far. The first one was here, which happened back in February of this year. Now we have the second deepest one. So we can see that the sell-offs are continuing. What could this mean for us? Well, basically, every time such high volume bars appeared, we were close to the bottom of the correction. This doesn't necessarily mean that the bottom was reached, because it hasn't been yet. If we narrow down this chart, we'll see. Here, we have a certain quite noticeable correlation between these various volume bars that we clearly see, specifically the vibrant green and the deep red ones, and the prominent orange line, which might prove to be a bit tricky to highlight nicely and effectively here, actually, within this particular visual representation. But we can see that every time there were these high volume bars, the area around the correction, the bottom of that correction was being reached. So I expect that the pattern here might be similar, and this in turn may mean that the bottom has not yet been reached and that $100,000, $110,000 we talked about in the technical chart are still within reach. It's time for on-chain analysis, and today I have three indicators for you. The first of these is the amount of stablecoins in circulation, which is an indicator that tells us whether buying power is still increasing even though a correction is underway. And in my opinion, yes, they are increasing, because we can see our orange line, which represents the indicator, and the gray line, which is the price of Bitcoin. Let's focus on the indicator, and we can see that it has been steadily moving upward for several months now. Even right now, even if we narrow down this area, we can see that the amount of stablecoins has been consistently increasing in recent days, which can only indicate that the buying interest remains very strong. Now it's time for NUPL, or net unrealized profit and loss. This is an indicator that tells us about unrealized profit and unrealized loss. And the fact is that this indicator refers to the fundamental principles of Bitcoin, but it's worth watching to see if a correction is also taking place here, because such a correction could indicate that space is being created for another upward move. As we mentioned in previous videos, NUPL is reaching quite high values, around 57, but these are not yet the peak values for the current bull market, where the peaks were 62, 63, basically 64. However, these are still far from what we saw in previous bull markets, where the threshold value was around 75. 0.75. Currently, NUPL is much lower. We can see that this ongoing correction is nicely resetting the indicator, keeping it in the optimism zone the whole time. But currently, the indicator is at 0.55, so much lower now, and this gives us room for another breakout on Bitcoin to the upside to happen at any moment. For Bitcoin to break out, this should be correlated with the amount of Bitcoin on exchanges, which in turn should be decreasing. However, we are not seeing this pattern at the moment. Instead, we can see that the amount of Bitcoin on exchanges is increasing. This is a process that has been gradually progressing basically since mid-June, and to this day we can see that the amount keeps rising. So in my opinion, there will definitely be a reversal on this indicator at some point, but currently the selling pressure remains strong, which in turn may once again mean that $110,000 per Bitcoin is achievable. It's time for a contest. Let's start with the rules. Present your own analysis of one of the cryptocurrencies I mentioned in today's video, so it can be Bitcoin, Ethereum, or Chainlink. Share your perspective, technical, on-chain, sentiment, fire chart, fundamentals, whatever you like, and remember, you don't have to agree with me. The author of the most interesting comment posted by Friday at midnight will win 20 KNG from me. And the winner for the previous episode is Piotr Jeziorski, who analyzed Bitcoin. Congratulations, a really great comment, and by the way, very accurate. Please contact support now to claim your prize. Of course, also remember that if the content in these materials is too complex or too complicated for you, but you want to learn technical analysis, you can check out the technical analysis lessons at Kanga University and calmly start your own education. And you'll find the link to the relevant lessons in the description of this video. That's all for today. If this is your first time here and you enjoyed it, a subscription is always welcome, as are comments and a thumbs up. Also, please rate this episode on a scale from 1 to 358, where 1 means it was weak, bland, and you don't want to see me here again. 358 means it was fantastic and you want more of this. And if you want more of this, then you know when we'll see each other again. Bye.